What's good, y'all? It's HB Punch and Profit. It is January 7th, 2025. We're going to break down the price action in the NASDAQ. If you want to see the live execution for this trade, you can click on the link in the description below. But before we get into it, please like the video, comment down below, subscribe if you're new. So first things first, higher time frame. It was bearish for me because we had this new week opening gap in this gray box and the black outlining that has not been filled. It's an unfilled new week opening gap. So if we got some sort of signal at the 9:50, 10:10 macro after the 9:30 opening, okay, for price to push down, that was going to be a beautiful confluence, which we did. We got an inversion, bullish fair value gap, bearish fair value gap, overlaps, advanced market structure shift at the blue line, get a candle close under it, and we push down. We're in the silver bullet hour, okay, when we get this little retracement back, okay, and then we get another signal, bullish fair value gap, bearish fair value gap. Now here, when we got the advanced market structure shift, I added on, or you can call it pyramiding. I added on right here, and we pushed further down to close this gap. So altogether, I got a nice, I believe it was like a 2 to 8, and it got me roughly around 272 points. Okay, awesome day. That's why it's important to know your higher time frame bias. If you know things about the new week opening gap, you can take advantage of that. I usually like to take one-to-ones, right, or low-hanging fruit, but I was very adamant on filling this gap. I knew that it acts as a magnet for price, okay, it being unfilled, and there was a good chance we were going to continue on down. So had a position here, added on here, finished off at filling the gap. Okay, now it was a little bit tricky with the entries because you got the candle close, but you didn't get a retracement back up. Okay, if that's the way you like approaching, you missed out on these two trades because they never retraced back. That's why I like to know my higher time frame bias, know the daily, know the 4 hour, know the 1 hour. Okay, and you're very, very confident in that. You get your inversion. As soon as we touch that blue line, I'm entering in. Now, if you take that approach, you may want to have a tighter stop. May want to put it above the inversion. May want to put it a few points above the blue line. That may be a good approach if you're going to tap in as soon as we get to the blue line, right? Same thing here. Didn't retrace to tap you back in. But if you're confident and you knew it was going to fill this gap, as soon as you touch that blue line, you're in the trade, and boom. Take little to no drawdown. You keep it at swing high, inversion, few points from the advanced market structure shift, you would have been gravy. Okay, there was, I believe, another opportunity right here. See if I can mark that up. You had an inversion. Okay. Okay, you can put your stop at swing high. That's a nice little stop because it's not far from the inversion. Get your advanced market structure shift right here. Change that to blue. Okay, once again, don't believe it retraces, but what you could have done here is aim for a nice, see if it would have got you a 1-to-1 at least. Okay, if you kept your stop up there. And yes, it offered you at least a 1-to-1, and that's about as much as I would have taken considering we filled the gap already. But it was there, or unless you kept a tighter stop, kept it a few points from the advanced market structure shift, let's say 10, right? You were good. Now you got a 9-to-2. Very nice. Okay, so there were a few good trades, and I'm sure there was one to the upside, but I wouldn't have been trading past 12 o'clock. So that was the day. And once again, like the video, comment down below, subscribe if you're new. Peace.